The historical trajectory of the bond market has undeniably shaped the financial landscape, offering valuable insights into the evolution of global economies. A pivotal era unfolded from 1982, marking the onset of a remarkable 40-year bull market in bonds characterized by a consistent decline in interest rates. This extended period witnessed unprecedented market dynamics, laying the groundwork for subsequent developments. During this prolonged bull market, politicians leveraged the allure of lower interest rates as a means to defer tackling underlying issues. Wrapping problems in the veil of bonds became a prevalent strategy, allowing governments to sidestep immediate problem-solving in favor of short-term solutions. The bond market, in essence, became a tool for political expediency. However, this seemingly stable market was not immune to manipulation. In 1993, Wall Street orchestrated a bond market collapse as a response to President Clinton's healthcare plans. This strategic move showcased the vulnerability of financial markets to external influences, highlighting the potential for manipulation to counter political initiatives. The emergence of Bitcoin marked a significant turning point in the financial narrative. Born out of a desire for a decentralized and resilient alternative to traditional financial systems, Bitcoin offered a potential solution to the pitfalls of manipulated markets and economic collapses. Its decentralized nature and finite supply stood in stark contrast to the whims of central banks and political machinations. The 2008 financial crisis further exposed the fragility of traditional financial systems. Goldman Sachs, a prominent Wall Street player, was accused of inducing a stock market crash to influence the crafting of a relief package. In the aftermath of this crisis, Bitcoin began to be presented as a remedy to the consequences of inflation resulting from historical market manipulations. The cryptocurrency gained traction as a hedge against traditional financial vulnerabilities. The year 2022 brought about a seismic shift in global dynamics, triggered by the Ukraine-Russia war. This geopolitical upheaval served as the catalyst for a secular bear market in bonds, putting an end to the four-decade bull run. Predictions surfaced of a multi-year rise in interest rates and increasing inflation, reminiscent of the market trends observed in the 1970s. Amidst the anticipation of an economic collapse due to persistent inflationary pressures, Bitcoin emerged as a potential savior. Positioned as a remedy for the consequences of inflation and economic collapses, Bitcoin's green and decentralized nature set it apart from traditional financial systems. Investors began to view it as a safe haven in times of economic uncertainty. Bitcoin's environmental impact also came under scrutiny, and surprisingly, it was lauded as the greenest industry globally. The cryptocurrency's utilization of stranded energy for mining presented an environmentally friendly approach compared to the energy-intensive processes associated with traditional financial systems. Beyond its environmental merits, Bitcoin was suggested as a tool to demonetize war. Its inability to be printed like fiat money made it resistant to manipulation for funding military endeavors. This unique characteristic added a geopolitical dimension to Bitcoin's narrative, positioning it as a potential force for positive change in global dynamics. Estimates of Bitcoin's total addressable market soared to around $400 trillion, fueling optimism about its potential to disrupt traditional financial markets. Proponents argued that Bitcoin had the capability to demonetize fiat money, gold, sovereign bonds, and even property markets. It was predicted to outperform other forms of investment, challenging the established norms of the financial world. The advent of exchange-traded funds, ETFs, particularly spot Bitcoin ETFs, played a pivotal role in facilitating investor entry into the Bitcoin market. Institutional investors, including heavyweights like BlackRock and Fidelity, contributed to a substantial influx of $7.35 billion into Bitcoin ETFs since SEC approval. This institutional endorsement signaled a growing acceptance of Bitcoin within mainstream financial circles. The year 2023 witnessed a significant surge in Bitcoin's price, reaching a 19-month high of $441,000 in December. This unprecedented rise was attributed to the anticipation of the SEC's approval of a spot ETF, expectations of Federal Reserve rate cuts, and the upcoming halving event. The convergence of these factors created a perfect storm, propelling Bitcoin to new heights and capturing the attention of investors worldwide. Despite Bitcoin's resurgence being seen as positive for crypto investors, it is crucial to acknowledge the ongoing volatility associated with the cryptocurrency. Price surges, while exciting, come with inherent risks, and investors must exercise caution and conduct thorough research before making financial decisions in the crypto space. In conclusion, the historical narrative of the bond market, coupled with the emergence of Bitcoin as a disruptive force, has set the stage for a positive outlook on the cryptocurrency. As we navigate the evolving landscape of global finance, Bitcoin's decentralized, resilient, and environmentally friendly attributes position it as a potential cornerstone for the future of financial systems. Please go ahead by liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.